Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. In this live stream recap video, I want to go over a SPY put scalp that resulted in 30% plus return for the members. Now I will show you the area where we entered and exited and the specific messages I sent out to the CFO Swing and Watch members in the Discord. Now for the past few trading days, we barely got a trade in as the markets continued to capitulate from the FOMC meeting that took place last week. So if you take a look on the daily time frame, we've been going down straight for the past 4 days here. Now we're able to capitalize on this oversold run up though that we got yesterday and today with the swing trades that we had on names like Apple and Meta. Now, if you want to know more about these trades, take a look at the description box below and click on the very first link. It's very hard to miss, so make sure you guys click on the very first link. Now, with that in mind, let's first take a look at the 15-minute time frame of SPY. Now, you guys should know this is one of my favorite intraday time frames. So as SPY continued to climb and climb and climb, we benefited from the swing positions aforementioned. But I noticed that SPY was becoming a bit overextended, right? But as we all should know by now, SPY loves to move higher and higher even when it's overbought and overextended, especially when it's bouncing during a bear market rally or in an oversold bounce like in this current situation that we're looking at right now. So, we tend to get this overextension because a lot of people are more emotionally involved in the trade. They want to get in, they want to be a part of this rally, right? Especially after a nice gap up from yesterday's close. So, I was expecting a rejection at 387 during this overextended run. Now, why was I looking at 387? Well, in hindsight, on the intraday here, we have made a clear level of resistance at 387.30. But if you want to keep things very, very simple, just take a look at the whole number level of 387. So in order to get a real understanding of why I chose 387, we have to go back to the daily time frame. And so if you take a look right here, this dark blue line, this is my daily 50 SMA, and this is a very critical level of support, and currently we're using as a level of resistance. So this 50 SMA is a heavy level of resistance currently. And so before we had this oversold bounce, earlier in the week, I said, in order for us to have a nice Santa Claus rally, we need to start to seeing a oversold bounce, right? Before we get a Santa rally into the Christmas weekend. So I said that we need to absolutely see a retest of the daily 50 SMA since we just broke it a few days prior. So, we got that exactly today as we continue to run up higher and higher, even if SPY was overextended on the intraday time frames, and we eventually hit the daily 50 SMA. And guess what? The daily 50 SMA is still sitting at that 387 level. And that's how I was able to deduce where we need to see a potential rejection from this overextended run. And if you guys can see on the top left here with these small numbers, and if you take a look at the dark blue number, you can clearly tell that it says 387.02, and that's where the 50 SMA closed today. So if you go back on the 15-minute time frame, right, this singular 15-minute candlestick is where we took our 30% plus scalp to the downside. All right, so let me give you guys the screenshot of the messages that I sent in. So at 8:08, I said SPY puts here can be played after the retest of the 50 SMA, and we can write it down to potentially 385.50. And I said a quick scalp could just work, right? And it was a very, very quick scalp. As you guys know that we played the trade on this singular 50-minute candlestick. So the next message I sent in was the actual trade. So SPY 385 puts that expire on December 22nd. All right. Now, if you go down to the 5-minute time frame, okay, right? So this is where we got our entry. So we got in around, I would say it was around like 387.03. That was where I saw the contract getting filled, right? Specifically the 385 puts December 22nd contract, and we waited, right? And that's all we had to do. We just had to wait, and so we saw the nice push down, and eventually we kept them pushing lower and lower and lower, right? And on the last candlestick right over here, all right, we start to see a lot of volatility coming in, right? Because we're retesting a whole number level of 386, and so this is when I told my CFO Swing Watch members that there is a possibility that we can see another bigger bounce at 386. So watch out, and this is exactly what I said here, all right? So after our entry, we're up 7%, and I said I want below 386 or at least a 386 retest and bounce for my exit. So you guys can clearly see that you should always be assessing your risk, especially when you're looking at new price action and incoming data from the price action. So after I sent that message, we're up 10%, and after that, we're up 17%. Okay, and I said you can start scaling out if you're not waiting to hold here, right? If you're impatient about this potential put scalp to the downside, because frankly speaking, we are going against the trend, right? And whenever you're going against the trend, you want to make sure you're taking profits quickly. And so at 8:22, we're up 20%, and then at 30% plus, that was when I took the exit, and I told everyone to get out. And that was also when we retested around 386. So we got out around 386.14. Okay, I believe that's when the price was showing when I got filled for those contracts. And that's exactly how we got 30% plus. Okay, so we had a nice little tiny trade here, very, very quick scalp, but you can do it too. And it's something that people think that you can't take a trade this quickly, but you can, right? Especially if the trade works in your favor. And so if you just go back to the 15-minute time frame, right? And I was focusing on the 15-minute time frame as well. We were able to move down very, very quickly on this candlestick, and we got out right around 386, right? Even though we did not get that exact 386 retest, since the low of this candlestick was 386.07, we're able to get out with 30% plus results, right? And return. So obviously in hindsight, we were able to see a larger move down until we hit around 385.50, which was my initial game plan, right? But I did not want to get wicked, right? And I did not want to get faked out as well, especially if we did see a continuous run up again after bouncing off of 386 whole number level. All right, so that was the recap and review of the trade. Now I want to give you guys a SPY breakdown, so especially for tomorrow. And SPY on the 15-minute time frame. Okay, this is very crucial because today we ended up with a nice range between 387.30, okay, and 385.50. Okay, so those are our two whole number levels. One is a resistance at 387, and then one is support at 385.50. So both are very, very good whole number levels. And the fact that we ended up with a nice hammer candlestick with good amount of volume at close as usual. Since we do get a large amount of volume at open and close, this is a very nice looking candlestick, a very bullish one at that, with some good volume to back it up as well. So first of all, okay, thanks to this range that we've been playing between 385.50 to 387, we're looking at a nice bull flag. But if you kind of go further out into the chart here on the 15-minute time frame, we're looking at a very nice cup and handle, right? So we have our cup here that's been made, completed today actually, and then we start to make this handle here, right, at 387 to 385.50. So we have a nice cup and handle, and that is a very bullish chart. And so we have complementary signals here, right? We have a bull flag in this specific area, but in a macro perspective, we have a nice big cup and handle chart pattern. So tomorrow, we should be able to see a nice retest of 387. And once we get that specific third retest at 387.30, we can see a breakout above 387.30, and eventually we can go to 389 to 390. So this 389 to 390 area was a huge level of previous support, right? And I've been telling my members here that we have to be able to hold 389 to 390 as a level of support and an area of demand. And if we don't, we will immediately flush to the downside, and that's what we got, right? And I was looking and hoping that the bulls can come in at 389 to 390, but unfortunately, OPEX got the better of us here for the bulls, and we decided to flush down and went below the daily 50 SMA and continued until yesterday, where we finally got that oversold bounce. And from yesterday's price action and today's price action combined together, we're able to see that 15-minute intraday cup and handle chart pattern, which should allow us to have a nice revisit of the daily 50 SMA tomorrow. And if we have enough juice and enough steam left for the bulls, we should be able to see a breakout above 387.30 and eventually a retest of 389 to 390, which is now a new area of resistance. So that is my, I would say, extended or maximum target for this week on SPY. Okay, so don't forget the 389 to 390 area. All right, so that is it for this video. Okay, if you liked what you heard, please leave a thumbs up down below. And if you're new here, check out the description box below for the subscription link to the CFO Swing and Watch newsletter. And come take the next step with us by subscribing. I will see you all in another video, and thank you for watching.